Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Happy New Year, everybody, and welcome back to another edition of Dollars and Cents with Freedman Financial. My name is Marc Freedman.
And I'm Marion Gilman.
And we're back to provide you with some more financial advice in a language you can understand.
We got to start off the new year right.
We do, because 2024 is behind us now. Actually, a pretty good year, all things considered.
Certainly was.
Especially if you're in the investing game or you're trying to manage your financial future. I mean, a lot of people, sure, we've had lots of challenges over the course of the year, whether they're geopolitical issues, economic issues here with certain issues that have gone on here. Certainly
in the U.S.
Yep, prices have gone up.
Absolutely.
Cost of goods have gone up, but overall, I think people are pretty satisfied. You know, there's nothing when you think about personal issues, though, too.
Yeah.
I mean, you know, people. Well, look, we've lost some loved ones this year. We go through some challenges personally, but overall, I think we can say that last year was a pretty good year.
Absolutely.
And how are you feeling about next year?
You know, I'm pretty optimistic. What can I say? I'm typically optimistic.
Me too.
So, you know what? I think it's a good way to be. I'm sure the year will bring some positive days and some negative days. You know, good things happen, bad things happen every year. But overall, we've been very fortunate. We've had, we've had a great economy, and I think things are looking up.
Yeah, and frankly, I believe we're poised to even do better. Yes, we have an Inauguration Day coming up on January 20th. There'll be a change in leadership in Washington. But for the most part, I think it's business as usual for all of us. We'll continue to go forward doing the same day-to-day things we do, whether it's buying gas for our car, eating out, paying the tuition for our kids' education, going to work every day. It'll be the same as usual.
Absolutely. A lot of things stay the same. But you know what? There are always those little things that are unexpected that happen, and sometimes great, and sometimes not so great. But you know what? We meet those challenges head on and just move forward.
Yeah, we've been doing this podcast or a radio show or something attached to it for a good 13, 14 years now. Yeah. And oftentimes around this time, we share some of the insights that an economist or the chief economic advisor at a particular investment house is offering up with what they think the year will hold. And then we go back and we revisit what they said from the year prior. And what we normally find out is they might have their top 10 predictions. And you remember how many of them they generally get right, Marion?
Maybe 4.
About 4 or so.
Yeah.
That's about it.
Yeah.
So,
and by the way, by saying they get them right, it's usually right in the correct direction, not necessarily on the money as to what their prediction is as to what the stock market might end at or something.
Yeah. So, you know, as much as these economists get paid millions and millions of dollars to offer up these predictions that many people use as their baseline for how they're going to plan their financial future for the next year. So we've decided to take a different approach this year and add a little bit of levity and fun to our first show of the year. We're going to throw out every economist's predictions out the window. We're not even going to ask them. But instead, Marion and I are going to have a little fun with trying to answer about 10 questions about what we think will happen over the course of this year. Now,
by the way, we don't know.
We have no idea.
These are guesses.
This is purely coming from the gut.
Right.
It's
pure
how we feel today. I don't take this as the advice of this is what I need to do because Mark and Marion's predictions are X, Y, or Z.
And by the way, we're not changing portfolios based on our predictions.
We are not at all. But what we are doing is we're offering up a snapshot in time. And then at the end of this year, we will revisit this piece of paper that has recorded what we've said.
That's right. See how right we were or wrong.
All right. So I'm going to go through these questions. I'm going to write down our answers as we do this. And by the way, I just shared these questions with Marion about 2 minutes before we hit the red light on this camera. So
not even. I had no time to look up anything.
Nothing at all.
Nope.
All right. So question number one. Question number one. At the end of the year, will the stock market And we'll call the stock market the Dow Jones Industrial Average simply because nobody knows what the S&P number is or what the NASDAQ number is. So we're just going to use the Dow Jones Industrial Average, which is an indexed average of just 30 companies, by the way, 30 of the largest companies representing different indexes.
Yep.
The question will be, Marion, do you think the stock market at the end of next year will be up or down from now?
Up.
Marion says up. I say up.
Now, that's not to say that we might see a lot of volatility over the course of the year. I do think, though, we will see a positive year.
Okay, so with that in mind and kind of piggybacking on what you said, do you think that somewhere during the course of 2025, the Dow Jones Industrial Average will drop at least 10%?
Yes. What do you think?
But you just said the market was going to be up.
Yes, but normally there is, I can't remember the percentages, as Mark mentioned. I didn't have time to look up any of this stuff, but typically we see 2 or 3 5% corrections over the course of any year, and very frequently we see at least 1 10% prediction, and I believe that's somewhere statistically about in the 75 to 85% of the time we see that. So this year, given that we had such a good year in 2024, I would expect we will at some point over the course of the year see a 10% correction.
All right, and I'm going to go with yes as well, that I think we'll see a 10% correction. I'm going to expand it out.
Go for it.
How about 15%, Marion?
That's a little tougher, but I would say yes. How about you?
I'm going to say no.
Ooh, going against the grain.
Going against it. And how about 20%, Marion?
I don't think so. I don't think we're in for 20% this year.
All right. So remember, a 10% drop. If you have $1 million portfolio, that means that your portfolio just dropped $100,000.
Yeah, and you can't look at the numbers.
Can't look at the numbers.
Don't do that.
Because if you have a $1,000 portfolio, it means your portfolio dropped $100.
Exactly.
It's the same percentage, right?
That's right.
So percentages are important. The dollars, don't worry about the dollars. Look at the percentages. So we've got our predictions in for there. And so next,
Sounds good.
So the Dow Jones Industrial Average, and granted, we are doing this taping on December 21st.
3rd.
Oh, December 23rd. You're right, December 23rd. So I really don't know how the stock market ends for the year. Right now it is 42,500. So let's just assume that's the starting point for the beginning of the year, 42,500. Marion, what's your number? Where do you think we're going to end at the end of 2025?
45,000.
Marion says 45,000.
What about you?
I'm going to say 53,000.
Woo, he's optimistic, really optimistic.
I think we're going to have
Another
very good
year.
Okay.
Okay.
53,000 is what I'm going with. 53,000. That's my number. All right.
Sounds good.
All right. We get number predictions.
Well, let's hope Mark's right.
Hey, who knows? I'm the consummate optimist.
There you go.
So once again, when we build our investment portfolios for our clients, we're always investing in United States-based investments, certainly on the stock side, but also internationally. And in the past, internationally really hasn't kept up pace.
It's been a long time.
Yeah, with the domestic investments. So what do you think this year, Marion? Does U.S. outperform international, or does international outperform U.S.?
Well, I hate to say this, but I still think the U.S. will outperform international this year.
And I'm going to support that. I'm going to be on the same side with you, but I do think 2026 is the year of the international investment. So if you were thinking about if you thought, international investments may hold great potential, 2025 may be a great time to get your foot in the door to prepare yourself for 2026.
Yep. There are a lot of good things happening internationally. So I don't want you to think that I'm pessimistic about it for over the next year. I just think that the U.S. is further along than the international economy in terms of adjusting interest rates, et cetera. So I think they will still outperform this year. I think foreign countries will likely outperform in the future as well.
So we're about a third of the way through this New Year's Eve celebration. So we're going to throw some confetti in the air. We're on our way. Happy New Year, folks. We're almost there.
Yeah. I don't know. I think he's throwing the whole cup at the end, so we better watch out.
There's a whole bunch in here. So next item. We oftentimes, when we talk about asset allocation for our clients, we talk about investing in large cap, small cap, mid cap, large companies, value companies. Well, over the past couple years, growth has outperformed value.
And large growth.
The large growth especially.
Has outperformed everything.
Now let's remember the difference between growth and value. You can carve it up a number of different ways. But Marion, how do we generally explain the difference between growth and value?
So typically growth companies are those that take all of their profits and reinvest it into their company. So they don't really pay out dividends. They're very focused on high growth and the next big thing, or improving what they already do. Look at Apple Computer, or Google or Tesla. These are all large growth companies. On the other side, large value companies typically are those that have been around a little longer than the large growth. Not always, but usually. They still invest in growth. However, they also pay out some of their profits as dividends. And they tend to be a little bit more stable, not quite as fast growing. On the other hand, they might not go up as fast as the large growth companies, but they also don't go down as fast as the large growth.
Yeah, think about a value company as something that the product doesn't change much. Think about Caterpillar. Yeah. How much has the tractor changed?
Yeah.
Now, I guess if you work for Caterpillar, you'll say, okay, there's all sorts of technological changes. When you look at the Caterpillar tractor, it kind of looks the same. Yeah. When you go to a bank, how much has your bank changed? You still do the same things at the bank. Well, maybe the app has updated. Right. But beyond that, it's the same banking instruments that are out there. So think
same
about
thing
those.
with like toilet paper, Staples, things like that.
Utility companies.
Kleenex, they don't change.
No, and generally they pay a dividend. All right, so my question to you, Marion, for the upcoming year, this year, will growth outperform value, or will value outperform growth?
I say value outperforms growth.
Marion says value outperforms growth, which would be rather unique. And I think that's kind of going against the grain.
Probably
with
true.
What most people are thinking.
Yep.
I think that's, I actually think value is going to do well, but I still think growth is going to do better.
Okay.
So I'm going with growth.
And that's why we keep both.
Yep, that's exactly right. All right, but this year, though, 2025, will big firms, large cap firms, outperform small cap firms, or will small cap outperform large cap? What do you think, Marion?
I think small will outperform large. How about you?
And I agree with that. I think this is the year of the great acquisition. I think a lot of these large firms are going to be acquiring a lot of these really cool startup firms.
Sure.
And those startup firms will be making a lot of money on that purchase, thus pushing those small cap firms to become large cap firms just because they've been integrated into other large cap firms, but they're going to make money. So
well, at the end of the year, small caps started to outperform.
Right.
So I think it's going to continue.
I do too. All right, let's get away from the stock market for a minute. All right. Woo! Woo! We're throwing
do something where we have a better chance of being right.
So here's something else. So we know over the past few years, mortgage rates have gone up pretty dramatically. In fact, the current 30-year mortgage rate, 6.91% according to Bankrate as of today.
Yeah.
I mean,
it was down a little bit this year and then came back up.
Yeah, it did.
Yeah,
and
disappointing.
There are a lot of people that have mortgages in the 2s and the 3s.
And so they're not moving.
And a lot of people thought interest rates would have come down a little quicker this year. They did not. But it also puts a pause on some people's thinking upon whether they want to sell their place.
That's
even though they could get premium dollars for the places that they sell, they have to buy something else. And if they got to get a mortgage, they don't want to pay this premium rate.
Right.
So what do you think, Marion? End of the year, mortgage rates are at 6.91. Where do you think they'll be at the end of the year?
I think they'll be under 6%. I think we're probably looking at somewhere in the high fives, 5.5 to 5.9%.
5.5 to 5.9.
Yeah.
I'm just going to go with an even 5. I'll be optimistic. I actually don't think it's going to get that low, but I'll say 5 anyways. Just so we're a little bit different.
Yeah.
All right, we're in the range. However, this is the one that's always of interest to people. Currently, CD rates are at 4%. A one-year CD, you can find them around still, few and far between, but there are still a few that are out there at 4%.
Well, Mark, interest rates just went back up since the Federal Reserve, since last week. So since last Wednesday when the Federal Reserve met. And you can actually, I saw a CD advertised at a bank at 4.5% just today.
Okay.
I'm not sure. Well, we don't have that kind of rate here, but I think you can get that.
Let's just say you could get it between 4 and 4.25 right now.
Unbelievable.
Okay, so
yep.
we'll say 4 to 4.25.
Yep.
At the end of next year, the renewal rate on 1-year CD rates will be what, Marion?
3.5.
3.5. I'm going to say 3, which is still better. Which is still better than what it was 3 years ago when it was essentially zero. Remember that?
Yeah.
So we're getting there. But mortgage rates, CD rates, I think you'll still be able to get something, but nothing like what you got in the past. All right. Final question.
Oh,
we're already there. Final question.
Answer.
Woo! Final question. We have a new political cycle coming this year.
Yes.
And I think we all well know that the politicians are not America's favorite people. In fact, according to Gallup, the average congressional approval rating this year is 19%.
That's just horrifying.
To think that 81% of Americans disapprove of Congress, yet we continue to vote in the same people year after year.
Over.
Now, do you know why that happens, Marion?
Because everybody thinks that their person is not the cause of the
It's somebody else.
Whatever gridlock in Washington, D.C. It's somebody else's congressperson.
So I'll pick on Elizabeth Warren for a minute. Elizabeth Warren continues to get this huge majority vote here in Massachusetts. But if you looked outside of the country, who's the problem? Who's the problem senator?
Definitely not Elizabeth Warren.
Well, they're saying outside of Massachusetts,
I see.
everybody else says the problem senator is
Yeah.
Elizabeth Warren.
Yeah.
But the only people that can vote her out are the people in Massachusetts, and the people in Massachusetts continue to vote for her. I'm just using her as an example. Same thing happens with Ted Cruz. Same thing happens with all of these other politicians around the country.
Yeah.
It's not my guy. My guy's not the problem. It's your guy that's the problem.
Right.
But until we can change that voting, it's a problem. So we remain at a 19% approval rating of Congress in America. So when we look at the Gallup reading again at the end of next year, Marion, what are you thinking? You think it'll be up from 19%? What do you think it'll be, or down?
So I'm optimistic. I think that we actually have a Republican Congress in general, and a Republican president. So I think that they might get a little more done, whether you like what they do or not. I think more might get approved. So maybe individuals think, well, at least they're doing something. Because I think that's part of the problem is that we don't see much happening in Congress to change the situation. So I'm hoping the approval rating will be back up in the 30% range.
Aaron's going to say 30%. I'm going to go with 22. Up from 19. Hey, 22 is...
I'm the more optimistic one.
That's a
There you
10% increase. That's not better. So I'm going to go with
Yeah.
22%. All right.
There you go.
So
But we both think it's going to be better.
we do think it's going to be better. And we think financial planning will make your life better. And
We
if now is the
certainly do.
time for you to get serious about your financial planning and investment management needs, why don't you start your New Year's resolutions off right? We are meeting with individuals and families to get to know you, to introduce you to our approach for financial planning, for investment management advice, and to really set you on the path so that you can feel more confident in what your financial future might look like. So if you'd like, give our office a call, 978-531-8108. That's 978-531-8108. Or visit us on the web, freedmanfinancial.com. That's Freedman.
2 E's and a D.
Financial.com. You can go to the bottom of any page and put in your name and your email address. You can sign up for our weekly newsletter that's been coming out since March of 2009. Or if you want to learn about the clients that we serve, our fees, our processes, who we are, our bios, everything, it's all there on the website, freedmanfinancial.com. That's Freedman.
2 E's and a D.
Financial.com. And that will do it for us this year. We will see you back again next year. Actually, I think this issue is...
This is January.
This is January
Happy
already.
New Year,
Happy New Year,
everyone.
everybody. Oh, I'll throw some more confetti. Happy New Year, everybody.
Yay!
We'll see you next week with more financial advice in a language you can understand. Bye-bye.
Bye.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.